everyone. Thank you very much for joining us for this new episode of Terrazzo Talks here in Dubai. Also, a very warm welcome and greetings from the United Arab Emirates to our viewers from around the world. I'm Labraj Talwar, the Managing Director of the Terrazzo Group. Today, we sit down with two industry heavyweights in Martin Tricaud, CEO of HSBC MENAT, and Sunil Kaushal, CEO of Standard Chartered for Africa and the Middle East, for one of our most anticipated conversations of the Terrazzo Talks series yet. We will look at the region as a whole and dissect, analyze, and debate all things relevant to the region and beyond. I have the pleasure to introduce today Martin Tricaud, Chief Executive Officer of HSBC Middle East, North Africa, and Turkey. Martin is a senior international banker with extensive experience in the Middle East, Asia, and Europe, connecting customers across HSBC's global network in a banking career that spans 3 decades. Martin drives HSBC's growth strategy in the Middle East, North Africa, and Turkey by ensuring a clear and consistent focus on helping customers fulfill their ambitions locally, regionally, and globally. Martin's expertise in connecting customers to global opportunities has been a feature of his work since 2019 return to MENA, a region that is home to some of the world's most ambitious economic transformation programs, fast-growing capital markets, dynamic international trade hubs, and vibrant tech-savvy consumer sectors. The Conseiller du Commerce Extérieur de la France, appointed by French government decrees since 2001, Martin is also an ambassador for the Australian Indigenous Education Foundation. Martin is a member of the board of directors of HSBC Bank Middle East, HSBC Saudi Arabia, HSBC Egypt, HSBC Turkey, and the list goes on and on. We are greatly privileged today to have a person as experienced as Martin for our session. A very warm welcome to you, dear Martin. I now would like to hand over to my co-moderator, Yuvraj, who is the Business Development Director of the Terrazzo Group, and will be introducing the second panelist, Sunil Kaushal. Over to you, Yuvraj.
Thank you. I'm extremely excited to be here with all of you again today on this 4th edition of Terrazzo Talks. It feels like just yesterday we launched it just under a month ago. Just as a reminder, the purpose of this show is to engage with distinguished members of the business community and answer and discuss some very relevant and important questions in today's incredibly challenging economic environment. Today, we have two fantastic panelists in Martin Tricaud and Sunil Kaushal to help us do exactly that. Sunil Kaushal is the regional CEO of Standard Chartered in Africa and the Middle East. Sunil Kaushal is a member of the group's management team, and that is the highest executive body within the bank. He also sits on the group's risk committee, group's asset and liability committee, and group's financial risk committee. Sunil was awarded CEO of the Year by the Middle East magazine in 2019, 2018, and the Middle East EMEA Banking Awards. Interestingly, Sunil is a Singapore national of Indian origin and based in Dubai. Thank you so much, Sunil, for being with us here today. And Martin, of course.
Thank you. Thank you.
So the format of today's conversation will be as our previous talks have been. We will have 4 to 5 questions for our panelists, which will span in around 45 minutes. And we will then open up the floor to the audience and try and get as many audience questions as we can. With that, I'm happy to start with our very first question, which I will put to you, Sunil, if that's okay.
Sure.
So given the economic dominance of Saudi Arabia, UAE, and Qatar within the GCC group, how do you see these countries' economies faring over the next 3 to 5 years?
Well, thank you, Yuvraj. Listen, we've had a double whammy in the region. It's a combination of low oil prices and of course, the pandemic, which means that we will see a contraction in GDP ranging from anywhere from 4.5% to 6.5%. In terms of the number of years, it sets us back by at least 2 years. So you can imagine yourself going back 2 years into 2018 or so. And that's quite significant in terms of economic activity curtailment. It is better than some other markets. If you look at Africa, which I cover, we are in 25 markets in Middle East and Africa. 15 of those are in Africa. If you pick up South Africa goes back by about 12 years. It goes back to 2007 levels in dollar terms, which is, very, very significant. So I think it's going to be challenging. It's going to be challenging because the core of many of the economic models gets quite severely impacted in the short term, be it aviation, be it petrochemicals or oil and gas, be it logistics, real estate. So these sit hospitality, tourism, depending on which country you pick up. These sit at the core of the business models or the economic models, and those are quite severely impacted. So I think it will require a large degree of reset at all levels. And in these markets, you've got the government, which plays a predominant role in the economy. So there will be a reset required. There'll be, I think, a concerted drive for further efficiencies, deeper efficiencies. And there are going to be some winners in terms of sectors when this drive, picks up momentum, whether it is the digital, initiatives that will be taken on board, whether it would be sustainable kind of initiatives in terms of reducing the carbon footprint. So sustainability will be a big theme. So there will be winners, there will be losers as far as industries are concerned. But overall, I would say the next couple of years are going to be challenging, and every business should be looking at their own baseline performance and looking at projections with a fairly moderated kind of expectations on growth, and then how do you really generate the right returns with that sort of outlook. So that would be my response.
So Sunil, if I can summarize that, what it seems like you're saying is that we're looking at a U-shaped recovery rather than a V-shaped recovery in the near term. I think. Correct me if I'm wrong. Does that summarize what you're
saying? A baseline, because of the current year contraction being anywhere from 4 to 6%, you could get a flattering growth rate next year because the base itself has come off. But if you look at in terms of the economic output, you are basically back by about 2 or 3 years. So you can shape it the way you want to, U, V, W, but it is going to be. And I think the theme also is going to be, in my view, one of economic unevenness in terms of growth and also uncertainty, because we really don't, unless you have the trust in people to travel, to invest, trust and confidence, which will, I think, come once you have a vaccine which is widely dispensed and people have access to it. You can have world travel comes back to near normal levels, and the ability to invest in job growth. That's going to be quite challenging. And in this region, the other one, which, if I may just add, I don't want to take too long, is that you're going to see probably a fairly large reduction in the expat population, and which means it is going to have an impact down the value chain and in the ecosystem, whether it is supermarket purchases to real estate occupancy. And do remember, this whole COVID has changed the way of working. So you have new ways of working. People, it's now absolutely fine working from home. So, what happens to commercial real estate? What happens to certain jobs which earlier people thought could not be offshore, which continued with people working remotely from their homes? So I think the confluence of factors, and so businesses would have to reset and governments would have to reset.
Understood. Martin, what do you think?
Good. Thank you, Yuvraj. Thank you, Lavraj. So it's a great pleasure really to have this opportunity to debate and talk with Sunil on those regional challenges. So, and great talking to all of you. What do I think? Yes, obviously, this is a very challenging situation for the region. Your question, Yuvraj, is primarily about Saudi Arabia, UAE, you mentioned Qatar as well. You know, those countries are in slightly different positions when it comes to the current challenges. So I think there will be also different dynamics for between countries, and also we need to differentiate between the short-term perspective, say the next 18 months, and the longer-term outlook for the region. And even if we are going into even more detail, take the UAE, totally different dynamic between Abu Dhabi and Dubai, for example. And those countries are not addressing the situation, you know, from the same starting point. So in the region, there are some countries which are addressing the situation, you know, from a very, very strong, healthy financial position. This is the case of the countries with large hydrocarbon resources and a relatively small population. And those who are more dependent, you know, on global integration, travel, tourism, and definitely here they are more challenging. Saudi is in a way different because this is the heavyweight of the region. Obviously, you know, this is 50% of the GCC GDP, about 34 million population. So there are challenges in the short term, no doubt, as it is the case for any countries. Now, when we look at the medium-term outlook, and your question was about 3 to 5 years, we believe that you know, the opportunities in the region remain intact, and that when you look at the amount of infrastructure spending, when you look at you know, the demographics on a medium to long-term basis for the region, even if we see in the short term in some countries, you know, large number of outflow of population, expat in particular, in the long term, you know, this is a region with more than 400 million people. Demographic growth has been there, so I remain reasonably optimistic on the medium-term outlook. Now, there is a need for some adjustment in the short term, definitely, and all countries have to address those adjustments, you know, rising unemployment in some countries, or expat exodus in some others. That's absolutely inevitable. Just one point on the medium-term outlook. You know, there is a situation that we are living every day, the impact we are seeing on our businesses, and we can't ignore the challenges. You know, many of our customers, corporate customers in particular, have been facing quite dire situations. You know, cash flows have been strained, and so we should not be in denial in any manner. This being said, when coming back on the medium-term outlook, if you look at investor appetite for the region, it is really very encouraging to see the amount of appetite, you know, for the region. The region has issued about $70 billion over the last 8 to 9 months. This is unprecedented. If you look at the most recent issuance from Department of Finance, government of Dubai, $2 billion, oversubscribed 5 times for 10 billion. So great successes, which are vote of confidence, you know, in the longer term outlook, certainly for the region.
Understood. So I just want to make this slightly more specific. We've spoken about the region, but I'd like to just make it a bit more micro and talk about Saudi Arabia and the UAE specifically. You know, Saudi Arabia is pushing ahead with multi-billion-dollar plans to build a spate of new cities despite the pandemic and depressed oil prices. And I assume betting that the projects closely associated with the Crown Prince will kickstart its economic recovery. On the flip side, the UAE, its real estate sectors, expos coming up next year, trade, artificial intelligence, this burgeoning development of technology throughout the city. If we could just make it more micro, how do you see the UAE economy and Saudi Arabia's economy sort of faring over the next 2 years? And I'll put that to both of you. Whoever wants to take it can take it.
Well, I'll echo what Sunil was saying about the fact that, we will not recover in terms of GDP for the region and for the countries you have mentioned. We will not recover before, at best, I would say, first quarter of 2022, the level of GDP we have seen at the end of 2019. So coming back to your question about VU, looks more like a U, but then with some nuances, than a very strong V. But this being said, we need to be very specific about industry sectors. And some sectors have been doing very well. You mentioned the tech industry. It has been doing particularly well. Retail in some areas has been doing well. Grocery, shopping has seen very, very high volumes. So now we can't ignore the fact that in the case of Dubai, in particular, dependency to global travel, global tourism, global aviation is high, and before we see those industries, activities, recovering to the level we were seeing them before, there will be one thing which will need to happen, which is the vaccine. And the vaccine, that will be really, I believe, the trigger for those industry sectors which have been threatened by the current crisis to fully recover.
Understood. And just one last little line. So in a post-pandemic world, assuming the vaccine is around the corner, do you think there'll be increased competition for, let's say, FDI amongst countries like the UAE and Saudi Arabia, where before it was probably always coming towards the UAE? Do you think the sort of next 5 years holds more competition for foreign direct investment between the two countries?
I think so. And I think also there will be more competition for FDIs in the manufacturing sector. Because something we are seeing with the pandemic is that service-based economies have been hit stronger than manufacturing-based economies, or economies where the industrial sector is big. Industrial sector, agricultural sector, they have been impacted a little bit less. They have been more resilient. If you look at, say, a country like Egypt, for example, in the region, with a large agricultural sector, a large, reasonably large industrial sector, sensitivity, dependency, has been a little bit lesser. So I think, yes, there will be competition for more FDI. It remains that services, everywhere are representing the larger part of the economy. But there is a realization that people and government have to work on their supply chain. Entire dependency on other countries has become more challenging. There is an expectation from public opinion, that countries should be able to secure their supply chain. That means also in some cases relocating some investments and some industries. And I'm absolutely convinced that governments in the region. You mentioned Saudi. I'm very sure it is on the top of the agenda of the Saudi government to attract more FDIs, and in particular in the industrial sector.
Thank you. So Sunil,
Yuvraj, if I may just add, if you look at the pre-COVID situation, this region had about forecast $75 billion deficit, fiscal deficit. That's gone up to $175 billion. And that would mean that when you get into next year and beyond, you'll need to prioritize. You need to prioritize which areas you want to invest in. I have no doubt that the industries, the oil and gas industries, which are core to the countries, they continue to attract investment. There could be certain, reprioritization there. I have no doubt that some of the projects that you mentioned, which are part of the broader vision, will continue to get the investments in. However, I think as a business community and as as people living in these countries, we have to be prepared that this deficit ultimately has to be financed. It has to be financed either in terms of higher growth, which pays for itself through some levies, or be prepared for higher levies, as you've seen in the case of Saudi, where you've seen VAT go up from 5% to 15%. And this is a phenomenon which is applicable across the world. So once the pandemic is sort of under control, and we've got a huge, more than $12 trillion has been spent in terms of stimulus. That money, that money has to be refinanced at some point in time. So I think you're going into a phase globally, including the region, where after we've got over this hump, you're going to see higher levies and higher taxes.
Yeah. And are you surprised at how the stimulus packages have been rolled out in the region? Do you have any comments on that? Any surprises?
Listen, the stimulus package in the region was fantastic, particularly UAE and some of the smaller countries. You're talking about 11-12%. That's the gold standard in terms of stimulus packages. You've had some of the poorer countries, because I cover the whole spectrum, so I can see countries which have got a deficit of 12-15% and who've spent maybe only 3% on stimulus, and others which have spent 11-12% because they have the fiscal elbow room. So I think the response has been excellent. You've got good stimulus. However, given the composition of the labor force, the stimulus has not been there to protect jobs and to protect paychecks. So if you look at Singapore, for instance, 70% of a paycheck is protected by the government. Bahrain has done something for nationals in terms of the salaries for 6 months. But if you look at the furlough schemes in the UK, or you look at the paycheck protection program in the US, salaries and purchasing power has been protected. And that creates then a kind of a baseline as far as the demand is concerned and consumption is concerned. But the composition of the labor workforce and the workforce here is quite different, in this region. So you're going to see a deeper kind of a reduction and then probably movement up.
Understood. Interesting. I think we're ready for the second question.
So we get on to the next question. How do today's low oil prices affect the region's economic outlook in the long term? Do you see certain countries scrambling to diversify their economies? Have some countries left it too late? Who would like to take that? Sunil or Martin, whoever wants to start, please.
Yeah, maybe a few comments on that. In April, we saw the oil price, finding a trough, and we saw a reduction in terms of production by almost 25% globally. So that means almost 25 million barrels a day, were not in the market. And despite of that, the oil price were really extremely low. So the market has recovered and has recovered reasonably nicely, being close to 40 and navigating between 39, 44, 45, over the last few weeks. That's not too bad, even if it is still significantly below the equilibrium point for a number of countries in the region in terms of fiscal deficit. But at least it has improved significantly. And when I look also at Chinese imports and Asia Pacific import more generally, they are at a very high level today. Very high level, which is also encouraging, as a sign of the strength of the recovery in Asia. Now, it remains that even if some economies, Dubai is a magnificent example of that, have been able to diversify from oil and gas. It remains, that oil and gas is in a way the blood, the fuel of the economy in the region, either directly or indirectly in terms of recycling of liquidity surpluses in the region. So it remains very important. What is really sad and unfortunate is that the diversification from oil and gas has been very much in sectors which have been badly hit by the pandemic. Aviation, tourism, hospitality, etc. So this is a challenge, and diversification in services, in particular, as I was saying earlier, which have been particularly hit. So it remains a priority. Diversification, definitely. I think it will go towards more manufacturing, more support also given to SMEs, very important to all governments in the region, because they are also big employers. And beyond that, there will be a need to diversify energy-related industries themselves. So not only oil and gas, but renewable energies. And diversification in terms of an energy consumer, for many countries in the region, from an oil and gas avid consumer to a more renewable form of energies. And many countries have been doing well already from that perspective. With the UAE has been doing very well. Saudi is investing a lot in renewables. So that's encouraging. So there will be different form of diversification going forward.
Understood.
If I may just add, and I agree with what Martin has said, but a couple of points here. If you look at the recent report that British Petroleum came up with, I think it was the day before yesterday, when they were presenting their results, I think, they have said that probably peak oil demand, which was expected sometime closer to 2030, has already occurred. Global demand is about 100 million barrels a day. We're down to about 93 odd. And they're expecting that you probably be at the ballpark of 100, 105 in terms of peak oil demand. So compared to the 1.5%, 2% growth over the baseline 100 that we had or were expecting. So if that's the case, you probably are talking about, and it could be a case of being too pessimistic when the chips are down, and you could see a massive resurgence in demand, but it looks unlikely because of reasons that Martin himself mentioned, right? In terms of diversification of energy sources. If you look at the EU has brought forward or made their targets more aggressive in terms of how much reliance they will have on the renewables. It was supposed to be 40%. They've hiked it up to 55%. So that, I think, is a secular trend one has to bear in mind, that oil price demand probably is somewhere close to its peak. Now, who knows whether it is 110 or is it 100, but let's take it somewhere in between. I think the challenge is going to be what sort of industries can you promote. Now, large markets like Saudi, yes, I think they have a captive market, and I think they can and they will and they are promoting a lot of manufacturing. But then you got to find the competitive advantage in locating manufacturing in other GCC countries, and what sectors will they be competitive in? It could be in more in energy intensive sectors, because you're going to have a lot of renewable energy where the prices are falling off, and they are now below fossil fuel parity. So that's going to be there. But in terms of diversification, I'll make a couple of points. You're going to see diversification in terms of the capital sources. What used to be economies run largely by the government, largely financed through petrodollars, you probably will see more FDI, more private sector capital coming in. And you're already seeing a fair bit of privatization already being jump-started. Because there's that much you can depend on public markets and do bond issues. You then need to get permanent capital in, which is kind of FDI. So you're going to see a diversification there. You're going to see a diversification in outbound in terms of going and investing in new markets to generate new sources of revenue and could be new industries as well. So you've seen, investments going into even markets like India onto the Geo platform by some of the GCC countries. You'll see investment going into, you already see investment going into technology platforms in the West. So I think there's going to be diversification in terms of capital coming in from different sources and into different industries, downstream value add, and also capital going out, getting invested in industries that will diversify the source of income and that provide a counterbalance to the oil and gas sector.
So this idea of peak oil that you referred to, Sunil, is obviously something that's been spoken about a lot and it's debated widely. Do you think that which countries do you think have sort of followed a blueprint? Because you can see peak oil coming. We could have seen it 10 years ago. Yeah, whether we've reached it or not is another question. Which countries do you feel are a blueprint of diversification till date? Obviously, diversification is a long-term sort of strategy. Which countries in the region would you say are sort of blueprints and examples to be followed in terms of diversification? Would you say UAE is one of them?
UAE is clearly, and within UAE, you look at, of course, UAE as a whole, but you look at Dubai. Dubai ran out of oil, a couple of decades ago, and reinvented itself, completely reinvented itself. And I think that broad theme applies to the whole region. If you look at Singapore, 2002, 2003, 2003, it was asking itself, why Singapore should exist, because there was no industry. The electronics industry was getting hollowed out, manufacturing was getting hollowed out, moving on to China. The banking sector was moving offshore, and the question they asked themselves: what are our competitive strengths, and which are the sectors that we can bet on for the next couple of decades? And they picked up five sectors: wealth management, commodities, oil and gas, biotech, etc., and went after it. And you can see the results now. I'm not talking about 50 years ago. I'm talking about 15 years ago, and so they made a massive, huge success out of it. Yeah. So I think that's the reset I was talking about, and that's already happening. When you look at these vision statements and vision and the plans that are there in the region, clearly many of them are moving in that direction.
Understood. Martin, do you have anything to add to that?
No, I totally agree. No country can afford today to have a hyper specialization on one industry sector. It becomes existential, really, to be able to diversify economy and not to be too dependent, on other countries. So those who have done less will have to accelerate, and those who have done a good job will have to revisit their industrial specialization and maybe to adjust a little bit if it is too much exposed, to the challenges we have seen recently, and the pandemic in particular.
Yeah, great, awesome. So I think we can move to our third question, which we kind of touched upon this earlier. But if I may, COVID-19 has floored much of the world at one point or another. Have there been any surprises for you in terms of how the region has coped with this? You can compare countries as you may. And if yes, how has that affected your specific bank's corporate strategy? Has it to any extent? And Sunil, why don't you take this?
Yes, in terms of COVID, as you rightly mentioned, it hit the whole world. We touched upon it briefly. The region's response has been, I think, very commendable in terms of managing the impact on the economy with the stimulus. Although, as I said, there are some differences between what the region has done and what some of the other economies have done in terms of supporting employment. And the second one is the whole overall response to the health issue and how the pandemic, the impact of the pandemic has been managed. So it's been commendable, and we stand out as an example for the rest of the world. Many people say this is probably one of the safest places to be to keep away from the pandemic. I think in terms of the impact, long-term impact on the economies and the likely structural changes. I think one which we see globally, and it's not unique to the region, is digitization. You know, all of us are having this meeting virtually. Who would have imagined that we could do it with, you know, dozens of people, and in some cases, you know, I've had in my region with 5,000 people, a town hall. That was unimaginable. So I think the fourth industrial revolution has been brought forward at least by 3 years, if not by 5 years. And that's really going to spur a shift of a lot of industries onto digital, industries that were hesitant to move to digital. Health, for instance, retail for sure was moving in, but had not taken such a prominent role in the region because going to the malls, etc., was still you know, a big theme in people's lives. I think, but that's changed. You know, food delivery at home, so on and so forth. Financial services, in our case, you know, we are doubling up on investments into digital. We created 9 digital banks in Africa. We are creating 3 more in the region. So I think digitization is a big theme. The other one, which is probably not that obvious, is that the view is that if this pesky virus could create such a big disruption in everybody's life, where you know, economic activity came to a halt, then we've got something staring at our faces, which is, you know, the impact of climate change. So the focus on sustainability and sustainable ways of doing things, be it in infrastructure, be it in our daily lives, I think is going to grow manifold. So may not be answering your question directly, but I think these 2 themes are going to be with us for a long time.
Understood. That's very interesting. Martin, do you echo that to any extent?
Yes. Maybe a couple of observations. You asked about whether we have had any surprises, and I would say that the first surprise, from my perspective, was that the resilience of the region, generally speaking, you know, was better than many were expecting. There was no run on liquidity. You know, we have not seen a series of collapse, you know, in the market as we could have feared really to see. So, and that was largely the result of the great collaboration we have seen between government, central banks, and the banking sector. And this is a major difference from 2008 and 9, you know, where the finance industry was part of the problem at the time and has been clearly part of the solution this time. You know, the forbearance schemes, for example, which have been put in place by central banks and Central Bank of the UAE in particular, they have worked very well. And the banks, you know, all of us have contributed to make them a success. So you have a triangle, you know, between government, banks, and corporates, you know, and the collaboration within that triangle has worked well. So. The second comment I wanted to make is this crisis has been an accelerator, definitely, and has revealed a number of things we were not sure of. Would we be able to manage the operations of our banks with no staff or almost no staff in our buildings, in IT, in dealing rooms, you know. The only areas in the industry where we had to have some staff physically present were in branches. And we kept a number of branches open, you know, reduced staff, but still there for customers who wanted to access physically bank services. Otherwise, resilience, you know, operational resilience for the industry has been almost perfect. I mean, for most of the players in the industry. That was a big lesson, you know. And even for a scenario which was envisaged, you know, when we were preparing and working on our contingency plans, envisaged, but certainly not seen as the most likely to happen. You know, we have all been preparing for geopolitical events, etc., but we never thought of a global pandemics, you know, where 99% of staff would have to work from home. And again, from a client experience perspective, you know, very, very few customers have told us, you know, that their banking experience was significantly impacted, negatively impacted, you know. On the contrary, we had many clients telling us, banks, you supported us in a remarkable manner. And we were not expecting that level of support in the circumstances. So that was a big surprise. Now, the point that Sunil is making on digitalization, I totally agree with that. It will impact on our ways of working. That will change. Necessarily. You know, anecdotal feedback from colleagues is that they want more flexibility, that they don't want to be 7 or 8 hours a day, 5 days a week in the office, that they want the flexibility to work from home when they prefer, to come to the office if they like. So that will change the way we operate, you know, to a large extent for the better, but we'll need also to be mindful of the fact that if people meet each other a little bit less often, you know, what are the implications in terms of creativity, in terms of collaboration, you know, in terms of just camaraderie in the office, friendliness, you know, and for new joiners for an organization, how do they build their network in the organization, you know, if they are new, if they can't meet people physically. So some positive surprises in reality. At the time, I would say at the peak of the crisis, but also many still unanswered questions, you know, about the way it will develop in the future. There is one third thing I wanted to say, because I think it was in your question about how did it affect our bank strategy. It will affect our bank strategy on what I've just been mentioning right now, you know, because that's very important. The well-being of our staff, accessibility from our customers, the way people can work in a more flexible environment. That's very important. But when it comes to business strategy, it has not profoundly changed the way we are looking at the business and the way we are looking at the region. The MENAT region for HSBC is a key priority region. You know, this is one of the largest contributors to our group profitability, and we continue to see the same potential in the future. So we definitely want to continue to invest, and what we have seen in the region lately has not been a trigger for changing strategy, revisiting our plans. We remain ambitious for the region.
So just touching upon this idea of working from home that's been brought up a couple of times. So I think it's obvious that the pandemic has enabled and sort of fast-tracked many large-scale social experiments that may have taken decades to otherwise carry forward. So the aftermath of this pandemic, I assume, will provide an opportunity to learn from a plethora of social innovations. I mean, online learning at schools, we haven't touched upon that, but that probably is one of them. So, you know, anything from really working from home to large scale surveillance has been a big thing as well. With this, do you think, you know, from a bank's perspective and from our perspective as Terrazzo as an organization, working from home has been the big social experiment. Has there been any other digital experiment or social experiment that you may conduct in the future, given your experience with working at home? or anything else that you have already done in addition to working from home? Anything that's been fast-tracked that you've taken note of?
Again, it has been an accelerator. You know, we have seen a major spike in terms of digitization for our customers, the way they deal with the bank. So we still had in the region, you know, in some areas, some customers who were not very comfortable, you know, interacting with the bank on a digital basis and transacting with the bank digitally. I would say that it has become really exceptional now. That very rare. So again, an accelerator, and the same, by the way, in terms of retail banking experience. The usage rate of our digital banking application, mobile banking application, has increased tremendously. So I think it's something, you know, we will never come back to previous ways of working and previous ways for our customers of dealing with banks. It remains that we need to give to all our customers, you know, all available channels. But I think going forward, digital will become by far, you know, the preferred way of interacting with our organizations.
Got it.
So Yuvraj, if I may add, I think in terms of the employment contract between the employer and the employee, I think that's going to, for certain job roles, change now quite significantly. And what do I mean by that? You probably would have for certain job roles a fixed output contract. You know, you do a certain number of transactions, you process certain number of deals, etc. This is what you get, rather than a normal employment contract, because you can work using flexible hours, like Martin said, but you deliver a certain fixed output. And so you probably would see a shift towards that. The second one is related to working from home, but a big change which has taken place in terms of, you know, a simple thing like internship for the youth, for the college students. Earlier, you could provide, or you were biased towards providing internship for people who were holding valid visas, who were based in your country, etc., etc. Today, with digitization, you could basically take interns from anywhere, and they don't have to leave their home country. So I think that's a big change. Creates a huge opportunity, particularly for people who cannot travel or underprivileged. So that's a big one. I think for the differently abled people who could not travel to office or found it very difficult to commute to office, they could be sitting in front of their computers and doing work. And again, related to the theme of working from home. So you could see the participation levels of the differently abled people increasing, but also corporates knowing that there is a path to bringing them on board because they've experienced, you know, that it is possible to work remotely. And the last one I would say is the value of corporate travel has become or will be checked. You know, is there that massive amount of value? For instance, I used to travel 4 days a week, and frankly, with digitization and using some of these capabilities, we're able to connect probably even more with you know, far-flung countries. So some of these are, I think, going to be quite fundamental.
Maybe if I may add one observation here. There is something which is a concern for me, which is the risk of social isolation with people staying at home more and more, and that's something we have realized, you know, at the time of the lockdown, that we had relatively large number of colleagues were on their own in the UAE in particular, with no family with them, you know, and most of their social interaction was at the workplace or with some colleagues. And I think we will need to find a way to be able to protect and manage, some quality social interaction for some people who were very much, dependent on their physical work attendance, to socialize with people, and who have felt very isolated at the time of the pandemic and the lockdown. So it's a challenge, because the trends are there, inevitable, and they are making many people happy. But we should not forget also people who would be happy, to be able to socialize with a larger number of people in their day-to-day life.
Yeah, I think just to add to that, I'd come across a Bloomberg article that recently came out, and I forget the body that conducted the study, but essentially elaborated upon the idea that it's too soon to measure the productivity gains or non-gains from working from home because of the mental aspect that you just mentioned, Martin. So that just echoes that. Awesome. I think we're ready for the fourth or fifth question.
So shall we get on to the next question? Thank you, Martin and Sunil. You've both been very forthcoming in your replies. It's been very encouraging, I think, for our audience to hear you both talk. So that takes me to the next question, which requires some light from both of you. As we all know, the UAE and Israel have struck a deal recently. How do you envision this will affect the UAE and the region economically? Will the region be perceived any differently in the West post this deal? So Sunil, what do you think?
No, clearly the perception, is going to be a positive, and it is already positive. It's not only UAE. I think that Bahrain has recognized. So I think it's opened the path to normalization across, different countries. It is not going to be easy. We've seen it that this issue is a very, very emotive issue. It's fundamental in many cases. For many of the countries involved, and many of the countries, have their home and political compulsion. So we have to see. It is still very early days. We hope that it stabilizes and it grows from here on, and it clearly creates a foundation for more economic, social, and relationships to grow. I think there's both countries and countries from GCC and Israel have a lot to offer to each other. Israel is a tech, powerhouse. It is, equivalent to a Silicon Valley for the Middle East. And we spoke so much about technology. There is so much that Israel could offer directly in terms of technology. So I think I'm very positive about that and encouraged by that. Related to that is delivery of health services and other services, education using those technology platforms. So, and then infrastructure in GCC requires a lot of investment, and there are other sectors as well, defense, on security, so on and so forth. So I think it's a win-win. The perception clearly is a positive one. The region needs that because we've always had events which have clouded the perception. So if one is able to build on it, as I said, it's still early days, I think it's going to be great for the region.
Thank you. What do you think, Martin?
Well, I would echo that. Perception, yes, it's positive. Also, we should not ignore that there is still sensitivity, obviously, about the subject for large number of people in the region. But perception, yes, will be positive. By curiosity, I looked at respective size of the economy of Israel and the UAE, and this is quite interesting to see that UAE is the 30th largest economy globally in terms of GDP, and Israel is the 31st. So they are almost the same size at $400 billion, almost the same size. and Israel, obviously, without oil and gas. So the potential is there in tech industries, agri-tech, fintech in particular. Potential is there in terms of tourism. We have a relatively small presence in Israel, and I was hearing someone telling me in this country that from their perspective, that was very important from an economic perspective. Unlike other countries with whom there were agreements made in the past, where they were seeing less potential, and also from a tourism perspective. And the reason for that was that when they want to fly eastward, going to the Far East, for example, it was a very complicated route, having to fly north first and then to take another flight. So the fact that Emirates, for example, could fly there, would shorten a trip to Asia by several hours, and it opens a new country for the region and for Dubai in particular, of people who can do tourism, visit, transit via Dubai, etc. So that's positive. Now that's a very early time. Your question is very topical because we received today the official abolition of the law banning trade with this country. It was notified today. So far too early to draw any conclusion, but moving into the right direction certainly.
What I found very interesting, just in my preparation for this specific question, Israel is home to 6,000 high-tech companies and startups, and leads the world in science and technicians in the workforce. So, in proportion, 145 for every 10,000 companies, compared to 85 in the US. Just to put that in perspective, I thought that was a very notable number. So I guess the hope is that it's more than just speculation of the positivity and actually translates into significant deal making on both sides. Any comments from anyone? Otherwise, I will move on to the audience questions, because I think we're running slightly short of time and lots are coming in. Great. Well, here we go. So I'm going to go straight to the audience questions. There's quite a few that have already come in. So Dr. Hemant Jetwani asks, given the importance of energy in the economy, what is the view on oil futures? Does anyone want to take that?
I think we
kind of answered that, but
yeah, we covered that to some extent already, and Sunil's comment about the fact that the peak oil is closer than what we used to think 5 or 10 years ago is certainly very valid. So I will not make any prediction about oil price, because in reality there are many parameters which are beyond anyone's control. Geopolitical, recovery in China, not mentioning the weather conditions in the US and in Europe next winter. But more fundamentally, we know the direction of travel. That will be less carbon-based energies and more renewables. So this is a shift, which has started already, which is happening globally, and which is happening in the region in particular. And I don't think there will be, or we can expect any change from that perspective.
Understood. I think we've already touched upon that, so I think we can swiftly move to the next one. So Janet Miranda asks and says, thank you for the valuable information. My question is more a generic one. Being pioneers in the banking industry and having the oversight that you do, which industries in the region do you think have been most adversely affected by the pandemic, apart from the obvious?
apart from the obvious. Is it? Yuvraj, did we get that right?
Yes, you got that right.
Well, I guess the obvious ones are the ones which have been, quite severely impacted. But yeah, for us in this region, clearly, hospitality, aviation has been a major hit. Real estate again. So these are obvious ones. These are very obvious ones. You're going to see, as I said, with the population decline, you probably will see a more broad-based impact, which will trickle down into services as well. And our view is that a lot of the businesses will probably never come back, given just the changes and the impact, the sheer impact of the pandemic. So it is very broad-based. It is very broad-based. And the first reaction is towards cost cutting. So it is going to touch, unfortunately, most industries, except the ones which are involved in some of the sectors that have benefited, as we spoke earlier, online, online retail, online deliveries, etc., logistics, so on and so forth, where they are hiring in big numbers globally and also in the region. But the rest, unfortunately, I think the impact is fairly severe. It's going to be sharp.
Understood. So then she asked a follow-up question in how difficult has it been to keep your employees motivated in such a challenging time, especially in the industry you're both in?
Let me just complete, because I had taken the question. It has been through communication. It's been through communication, being open and transparent to the extent one could, and open, transparent, and honest. But communication has been very, very important. So it is now those while the 4-day in a week travel is gone, 4 days in a week, reaching out to countries and having a virtual meeting them has completely come on now. So you've got to answer their questions, address their concerns. As far as the bank is concerned, we made a statement way back in March that every employee will get a paycheck for the remaining part of the year. So it does not mean that we will not take cost actions, but every employee has been guaranteed a paycheck till December, and that really reassured people. And where you want to get into any efficiency exercise, it is better to let people know in advance, so that they can look out for other opportunities. Yet they are aware that they'll be paid a paycheck till the end of the year. So that's been quite powerful. What Martin mentioned about the wellness, well-being, health, and well-being and wellness, hugely important. One cannot underestimate that. We've invested a lot. You spoke about working from home and the other social changes. We've had employee engagement programs, including things like yoga classes, counseling, etc., virtually available to our staff. So I think the staff find themselves in a good space, well taken care of during the pandemic. Of course, the economic impact when efficiency drives are undertaken by broadly across the economy, I think that time we'll have to probably double up our efforts.
Thank you for that. Martin, do you have anything? Would you like to add?
Maybe two comments on the question about the sectors which have been impacted. The question is challenging because there is this apart from the obvious at the end, and apart from the obvious, I would add, unfortunately, for all of us, banking. Banking has been impacted. The level of profitability of the industry in the region and globally will not be in 2020 what we would have expected in 2019. We have seen more provisioning, more credit impairment. We can't ignore that. the big difference is that banks are far stronger than they were 10 years ago. So they have been able to absorb that, but it remains that in terms of profitability, that will be a challenging year for the industry, and this is reflected in the share price of most international banks. On motivation for the staff, I totally agree with what Sunil has said. We have over communicated, and we made it a duty, to reach out proactively to all employees, colleagues, including those we thought could be a bit isolated, just to check in with them, to make sure that despite the fact that there was no physical presence, we were not losing in terms of intensity, I would say, of our communication with them. And by the way, that was exactly the same with customers, engaging proactively to maintain the bonds, the links we have with the community. At the end of the day, we are part of the community, and it was very important to us to show all our stakeholders that we were fully engaged, fully involved, and that the situation was challenging for all of us, but despite of that, it was not hampering our ability to engage.
Yeah, I think that's it. I hope that answers your question. So we got lots and lots of questions coming in. I think I'm going to just cherry pick two of them. So Dr. Heyman Jadwani asks, what do you feel will be the impact of the US election results on this region? That's something we haven't touched upon. So whoever would like to take that, please do so.
I think it is, I can only share with you what our advisors are saying, and this is not a house view. So the impact could be quite significant. The Republican candidate Trump winning, President Trump continuing, would clearly be in their view positive for the region, because it gives a sense of continuity, and all the initiatives he's undertaken for the region or in the region would really get a 4-year plus kind of life, and but at the same time it has its risks with the deal with Iran. The chances are that you'll have Democrats coming back, and that's what the polls suggest. This is not what we are saying. This is what the polls suggest, and that could result in a reset of quite a few relationships. So just contrary to what I said, if the Republicans coming in, you could have, if the Democrats come in, some of the deals that were or the agreements that were cancelled, those could be revisited. The relative position of different countries in the region that could change, and hopefully, whoever wins, we'll probably have a relook or hopefully a solution to some of the regional issues that are there in terms of relationships which have been frayed. So let's see. I think it's a significant election for the region. It's quite a significant one.
Mohan, would you agree with that? Is there anything you'd like to add to that question?
Well, I agree. This is probably the only, or one of the, probably the only election which does impact on all other countries, change, potentially the landscape for all other countries, including the Middle East. When you have elections in any European country, or it is important for the country, but it's not necessarily a game changer for the world. So definitely it will have some impact, and there is a special relationship between the Middle East and the US, and it has been the case now for more than 70 years, 75 years. So this special relationship is very important to the region from a number of perspectives, from a security perspective, from a geopolitical diplomatic perspective, and from an economic perspective. Now, what will be the impact? I'm not able to say. Obviously, if the President Trump wins a second mandate, we can expect some continuity. I've not seen clearly whether there would be some shifts, you know, and with the Democrat candidate. So I'm not entirely able to answer this question, and also I would not speculate, you know, or assume what could be his position, because I think, and that's what I'm reading, that on a number of geopolitical subjects, there is in reality a bipartisan view in the US. That does include, in particular, you know, the stance taken towards trade, relationship with a number of countries, etc. So we have, I think, 49 days from now before we can start commenting again and answering again your question, Yovraj.
Can you hear me? Sorry. No, I
Yeah,
said I
I
think
can hear you.
we're gonna have to have another session for that. So, last question, and this is for Sunil specifically from Zain Malik in London. It's quite interesting. Singapore and the UAE have constantly been compared to each other. If you were an exec or a budding entrepreneur looking to relocate, where would you relocate to, Dubai or Singapore?
If you're an entrepreneur
or an executive professional, I assume.
Well, depends on the sectors in. You know, I have lived extensively in both the Middle East. I first came here 97, 98. Of course, I lived for several years in Singapore. I'm a first generation Singaporean. So it depends on the sector. Do bear in mind that Singapore is quite mature, and in terms of demographics, or whether in terms of investment, quite mature. Of course, we're investing a lot in cloud. We're investing a lot in some of the high-end sectors. I'm hoping that the UAE is able to emulate some of those best practices and the strategies around sectors. So I would say, if you're a young man, you should probably come to the Middle East. You will have a longer runway. If you're 55 plus like me, probably go back to your country in Singapore. And so your question was a young budding entrepreneur. I guess the opportunity here, because there's so much more to do, probably is greater.
Good. Thank you for that answer. I'm glad I'm here at least then. Well, I think that wraps it up. Priya Mathur says thank you so much for organizing this session, and to Martin and Sunil for sharing valuable insights on the economic trends in the region. Dr. Himan Jatwani, who asked 2 questions, said very interesting discussions and good answers from the 2 professionals. And from my behalf, this has been a fantastic discussion, very valuable for me personally, and I'm sure to our audience as well. Lavraj, any comments from you?
Thank you, Sunil, and thank you, Martin, for a fantastic session and for very, very frank discussion on important subjects for the region. I'm sure everybody's found it very insightful, and I'm sure we'll get a chance to have some follow-up sessions in time to come and see how things unfold based on your predictions, what comes about in time to come. And I'm sure we'll have another occasion to chat again in public like this. Thank you, Martin.
Thank you very much. Thank you very much.
Thank you very much, all.
Thank you all. Thank you. Thank you very much. Bye.
Take care.